Hello fellow investors, in this video we're going to look at the natural gas services group. We are first going to review financial statements. On the financial statements we're going to pay particular attention to the balance sheet, and we are going to measure the book value per share for the NGS stock. The book value per share is almost double of the current market price. So essentially that's David Graham's investment style, where you buy, where you pay 50 cents on a dollar per repurchase. So, well, in our case, it's more like 57 cents on a dollar in being invested. So from this perspective, the company looks interesting. However, the company needs to work out some of its problems, like future revenue. The company and its management, the company's management has mentioned that they are working to improve the revenue. Well, they're saying that they're taking an advantage of the current market conditions, and they are buying more equipment for rent to take the current positive market situation. So the company looks interesting. It's very cheap, and the company may start turning around from the income statement side and the cash flow, operational cash flow side, and may start generating some free cash flow in a year or two. Then we're going to look at the technical chart just to determine what the price is and what are the trend lines. Okay, so here we go. Hello, dear investors. Today we're going to review Natural Gas Services Group, company that is providing natural gas services equipment and just pumping equipment, so for the natural gas and oil industries. It's a small cap company that is currently valued at about $130 million. What is interesting about it? First of all, its balance sheet. Current assets, total assets, $300 million. Virtually no long-term debt. These are deferred income tax liabilities, so this is the long-term debt, so virtually no long-term debt, so very healthy company. What is interesting? Shareholders' equity, $230 million. The company is currently valued on the stock market at $135 or $137 million. So if we and is currently being traded at $10.8 a share. If we derive the book value per share is currently at $18.88. So the stock price is $10.89. Book value per share is $18.88. So essentially, if you're buying the stock, you're buying it 57 cents on a dollar, which, well, the Benjamin Graham style of investing. Now, the problems. Obviously, there are some problems. The problems are revenue is growing, but is growing in line with inflation. The industrial companies have been hit with especially high levels of inflation, and so revenue is growing, but just barely. So $54 million in revenue in for 9 months of 21, 61 for 9 months of 2022. So assuming at least 10% inflation, I'd rather consider it 12 or 15. Well, hence the increase just in line with the inflationary pressure. So just barely being able to catch up with the inflation. What is good over here though? Oh, not good. The earnings per share, they managed to make 2 cents in net earnings per regular share for 9 months, which is not great. Or lost just 1 cent for the third quarter of 2022. Again, not great performance. Again, what is interesting about this company is the fact that they have no long-term debt, or like virtually no long-term debt, and that they're being traded right now at $10.89, and the book value is really $18, and the equipment minus all of the assets minus liabilities is $18.88. So you are getting almost you're getting $8 a share free, theoretically. That is if the stock price goes to the $18 level. Now, will the price go to the $18 level? If you go to the cash flow statement, okay, yeah, decent cash flow from operations. Then investments. If you look at the investment level, they rapidly increased. They started to increase the purchase of new equipment. When I listened to what the management is saying, they are saying that the current environment, where due to the war in Russia and the gas prices and in Europe, there is this environment where they see that the oil and gas prices are likely to stay high for at least 2 years, and they are very well positioned since they have almost no debt. They are very well positioned to take an advantage of the current market opportunities where there is very high demand for their equipment, and they can probably increase their profit margins, which they're planning to start doing, as I understand, next year. They did it in the beginning of 2021, and they're going to keep doing it in 2022. Hopefully, they're going to take it. They will be able to take an advantage of their position and increase their profit margins further than they want to. Apart from it, they further than they did in 2021, not in line with inflation, but higher. And again, they are buying more equipment, and they're in talks to get long-term debt to finance purchases of new equipment for rent. So there is a chance that the company will stop being the anemic company it has been for the past maybe 5 years, and will start finally growing in 2023, growing rapidly. The company's board of directors on their third quarter meeting said that they expect revenue growth of in the double digits. Well, I would assume in the lower double digits in 2023, but still in the growth in the double digits, and hopefully we are going to see some income. So another thing, interesting thing, they've been buying throughout 2022. They've been buying their own shares. They haven't. Well, they stopped buying their own shares, I believe, on September 30th. So they're not going to buy any shares. At least they're not planning, as far as I know, they're not planning to buy any shares in the fourth quarter of 2022. But that's a good sign. And again, given the disparity between the market price and the market price and the book value, I would assume they may start buying their own shares once again. So, conclusion. This is a very cheap company. This is the Benjamin Graham style of investing, where you're buying, like essentially you're buying 50 cents on a dollar. However, you will need to wait, I would assume, at least a year for the company to improve, take advantage of their position in the market right now, and for the stock price to go to this level, or maybe even higher, provided the company manages to generate good profits. So that's it. Voila. I'll just do a quick technical review of the company, and that's it. On the technical chart, first I would like to point out that NGS is being traded at the crisis level prices. So right now we are at the $10.8 level. In this level we were, well, obviously in around 2020, when gas prices, natural gas prices, were down at their lowest level in decades, and oil prices at this level, if you remember, got even negative in the futures market, which was absolutely insane. So this was another oil crisis in 2011-12. This was the crisis of 2008. This was the recovery period, so that's 2005. So that was the time when prices finally started to pick up from 98 to 2008. So we are still being traded at the crisis levels. So hopefully the oil and gas market is not in the crisis situation anymore, at least price-wise. Like, it's from the consumer's point of view, it is in the crisis situation, but not definitely not from the supplier's point of view. But the company is still being traded as if it is experiences crisis. So as the management said, they are not. Again, this was a monthly chart. If we switch to a daily chart, what we'll see this trading range that formed from July 2022 to now, and it looks like the price is bouncing off this support trend line, which is currently at around $10.25. So this trend line could be a very good entry point. Another thing, otherwise indicators are either oversold or just I couldn't find any meaningful indicators that would describe well the situation. I think again, we are trading near a good support, strong support line, a good entry point somewhere around here, with a potential bet of doubling your money if things start to get a little better. The market for oil and gas is already much better than it was just a couple of years ago. So, and however the price is. So it's an interesting stock to invest. However, it's a small company and it is not generating any income for now. But the book value is almost double the current market price. So if you're interested, please subscribe, and well, I'll keep posting some interesting things. Cheers, bye.